Hello, today we begin our exploration of the AI first financial frontier. This discussion will map the profound evolution of global payments as we see it in the current year, 2026. We will dissect the key technological and regulatory shifts that are defining this new era in payments, and our focus will be on the transition from digital to autonomous finance, a landscape increasingly shaped by artificial intelligence. We'll analyze the infrastructure, assets, consumer experience, and operational changes that characterize this AI first paradigm and help to provide a comprehensive view of the challenges and opportunities that lie ahead for the financial industry. So here we're looking at the great transformation from digital to autonomous systems. Earlier, the primary shift was from physical cash to digital payments, but now in this current transition or this current trend, we're moving from merely digital transactions to fully autonomous ones, a concept we can call agentic commerce. So in this model, AI systems are no longer just tools, but active intermediaries that execute financial decisions and transactions with a degree of autonomy. This represents a fundamental change in how commerce and finance operates, moving from human-initiated actions to collaborative human-AI financial management. So let's turn our attention to the global payment infrastructure revolution, as we're referring to it here. The traditional 3-day settlement cycle is effectively obsolete. The global adoption of real-time payment networks, such as the FedNow system in the US and international initiatives like Project Nexus, has reached a critical mass. And the infrastructure facilitates instantaneous cross-border remittances and real-time settlement for transactions. The impact is quite substantial. It has, in a very real sense, shrunk the financial world and eliminating the temporal and geographic friction that once defined global finance. So this is the new standard for liquidity and cash flow. So here we're looking at an illustration of digital assets. The speculative Wild West era is behind us, replaced by a regulated institutional grade market. The key players in this market are fiat-based stablecoins, legitimized by regulatory frameworks like the Genius Act in the US and the MiCA legislation in Europe. So these assets now serve as critical B2B liquidity bridges for cross-border transactions, and they function as programmable dollars, enabling automated escrow and instant payouts while mitigating foreign exchange risk. As the data indicates, a remarkable 45% of global financial institutions are now involved in processes that include these stablecoins. So now we consider the consumer revolution and how this impacts the person on the street, so to speak. In 2026, consumer expectations are moving far beyond the convenience of mobile wallets. The defining trend now is hyper-personalization delivered through what we call agentic AI. This is transforming the consumer's relationship with finance, and we see the rise of personal AI CFOs that delegate financial management, automate budget optimizations, and provide real-time advice. Invisible payments are eliminating the checkout process entirely, while biometric sovereignty can replace passwords with more secure multimodal biological identifiers and help to create a truly frictionless and secure financial experience for the consumer. Building on this point, we're looking at details of the 3 pillars of consumer payment innovation, which are particularly driving adoption among Gen Z demographics. So the first is invisible payments, where computer vision and sensors eliminate the checkout process. The second is in biometric sovereignty, replacing vulnerable passwords with passkeys and multimodal biometrics like facial and palm recognition. The third, regenerative payment loops, reflects a circular economy mindset using micro incentives and automated carbon offsetting to promote sustainable consumer choices. So the common thread connecting these pillars is hyper-personalization enabled by agentic AI. So in this case, it's crucial to understand that AI is no longer a peripheral but back office tool. But as we're seeing here, more and more AI has become the central nervous system of modern banking systems. So its influence potentially spans 3 primary operational tiers. First is the autonomous operations. where AI agents execute complex multi-step tasks without human oversight. Second category is credit and ESG scoring, where machine learning models analyze alternative data sets for more accurate risk assessment. And the third category is real-time fraud defense, which uses adversarial AI to monitor and prevent fraudulent transactions. And this can be done in milliseconds before they are even completed in some cases. So delving deeper into this autonomous operations and agentic AI. So banks are now deploying AI agents with agency, the capacity to execute complex financial workflows from start to finish. And a prime example is in mortgage processing. So something that happens very often, is very process oriented, and is where there's plenty of data points where that can provide the foundation for the AI training set. So these agents can autonomously gather documents using OCR, and verify income via open banking APIs and perform the initial credit assessment. And human review then is reserved only for the final approval stage. So this can significantly increase process speed and reduce application times from days to mere minutes, in fact, and can enhance consistency in terms of the customer's viewpoint and consistency and greater consistency in applying bank policy, and essentially freeing up the human personnel to explore further the more difficult cases, and to focus their time and attention on building value across the board in terms of better decision making is the ultimate goal for this kind of a system. Next, we're looking at the paradigm of next generation risk assessment. So traditional credit scoring is being augmented by AI-driven analysis of alternative data. Machine learning models now assess patterns in utility bill payments, real-time cash flow, and e-commerce behavior to create a holistic view of credit worthiness. So this can allow for dynamic credit limits that adjust in real time. And similarly, for corporate lending, AI can be used for ESG scoring, analyzing a company's environmental, social, and governance risks to adjust, for example, interest rates and inform lending decisions, and can impact loan pricing as well. Okay, you're going to have to make a cut in the video here. Here we discuss a critical advancement, real-time fraud prevention. The industry is shifting from a reactive to a proactive stance on security instead of analyzing fraud after it has occurred. Adversarial AI systems are now capable of predicting fraudulent attempts before authorization. These systems monitor transaction patterns in real time and can identify anomalies indicative of new or emerging fraud tactics. This prevention first approach can significantly reduce the high false positive rates that plague older systems and help to enhance customer experience by avoiding unnecessary transaction blocks, and at the same time providing a higher level of security for the bank and for the customer. So this pace of evolution is necessitates, of course, a corresponding regulatory evolution at some point, and this is where regulators are moving beyond simple, let's say, checklist-based compliance. The new focus is on digital operational resilience, ensuring the entire functional system can withstand and adapt to technological disruptions. So this involves real-time monitoring and systemic risk assessment, and a key component of this evolution is the demand for explainable AI. So as mandated by frameworks like the EU AI Act, banks now are required to provide clear audit trails and transparent explanations for decisions made by their AI systems, particularly in areas like credit scoring. So to be more specific, we can look at some of the key regulatory frameworks shaping the 2026 landscape. So the landmark EU AI Act, for instance, mandates that any AI used in credit scoring must be explainable, requiring banks to maintain transparent audit trails. In the US, the push for open finance is breaking down the data silos of traditional banks and forcing data sharing to fuel the fintech innovation. And then we see increased consumer credit oversight, bringing newer products like buy now, pay later under the same regulatory umbrella as traditional credit to prevent consumer over-indebtedness. So despite these advancements, there's still a trust challenge. The same AI that enables autonomous finance also powers the creation of synthetic identities, AI-generated, hyper-realistic personas, which can be used for sophisticated financial fraud. Traditional verification methods are proving insufficient in many cases against these kinds of threats. So the most promising solution would lie in decentralized identities. So by using blockchain-based identity wallets and zero-knowledge proofs, users can verify attributes like age or creditworthiness without disclosing sensitive personal data. So this can help to restore consumer sovereignty over identity and provides a robust defense against synthetic fraud and help to rebuild trust in the digital ecosystem. So looking at the road ahead for 2026, the landscape is showing there's quite a bit of complexity that is coming into the system from the high-speed payment rails, autonomous AI agents, and new regulatory frameworks. So the core takeaway that we have is that we're moving beyond the internet of payments and into the intelligence of value. And this is going to bring many, across businesses, not just in the banking system, impact consumers, impact the way business is done, impact processes, and companies need to be ready to adapt to this rapidly changing environment. So the ultimate winner in this new era will not be the institution with the most data necessarily, but the one that can most effectively translate that data into a trusted, secure, autonomous customer experience. So for banks, the mandate is clear. Re-architect your core around AI-led operations or risk being marginalized. So I hope you enjoyed this AI journey and wish you the best on your AI journey ahead and all the best for the day ahead. Thanks for tuning in.